information that the whole area is surrounded by Pakistan now. I came out from that in disguise, and after 5 to 6 hours I was in Kandahar. I don't have any message for Pakistan. There is no politician in Pakistan. They are puppets of Pakistan army.
Streaming now. This and more streaming on world's first news OTT, News 9 Plus. Download now.
Hello and welcome. You're watching First Take here on News 9, where we break down the morning action on D Street. I am Suyash Maheshwari, and with me, making a comeback on the show after a week-long holiday, is Amit Ranjan. Amit, a very good morning to you. Great to have you back on the show. How are the global markets doing this morning?
Okay, well, no cues from the US. They were closed due to Thanksgiving, and they will be open for only a little while tomorrow. So over the weekend also, there will be no cues from the US as such.
They'll be open for on Friday, right?
On Friday.
Yeah.
They're this thing, our Friday right now, so our night.
Right.
Yeah. So I'll go to the European markets. They were up 0.27% as of now, last closing. Hang Seng is down 1.52% today. Nikkei is up marginally at 0.7%, and Kospi, the South Korean index, is also down 0.34%.
All right. So mixed cues from Asian markets. European markets have extended their winning run to about 2 sessions. I'm looking at some of the other cues also, Amit, this morning. The dollar index is largely unchanged, but the good part is it still remains below the 104 sort of levels, and at around 103.7. It's at a 2.5-month low. Now, as we know, the on account of Thanksgiving, the exchanges in the US are closed, so the bond market as well as the stock market is closed. So we don't have cues as far as the bond yields are concerned. But let's also get back to the currency, because a big movement overnight is we saw in the euro prices, which held on to the strong gains of the morning, whereas some of the data that came out in the European zone regarding the PMI were pretty strong, and hinted that the downturn that the euro, the idea of downturn that eurozone was perhaps facing is now easing. Now, crude prices, which have of course been a big mover in the past few sessions, were largely flat, and currently they are hovering around the $81 a barrel mark. Now, yesterday we saw a big correction after OPEC plus group of oil producing nations postponed their November 26 meeting, which was to perhaps decide additional rate cuts, and we dropped below the production cuts. So we dropped below the $80 a barrel mark, but we have rescaled that and currently hovering around $81 to $82. Now, coming back to home, Indian markets also opened on a flattish note, but with a positive start today, with Nifty opening above the 19,800 level, and even as of 9:30 a.m. this morning, the market was holding on to those gains. As you can see on your screen, Nifty 50 as of 9:30 a.m. this morning was up 0.14% at 19,829 mark. Sensex, on the other hand, was still above the 66,000 levels, up about 0.08%. The mid-cap index, which by the way, Amit, is on a 16-day winning run, continues to build on to those gains, and as of 9:30 a.m. this morning, it was up about 0.33% at 42,167 levels, just about 20-30 points shy of its all-time high. The small cap index, which saw a major decline in the Monday and Tuesday, has recouped some of its losses, and it's currently hovering around the 13,900 sort of levels, from where it actually saw a correction. So as of 9:30 a.m. this morning, the small cap index was up by about 0.78%, sitting at 13,892 mark. Another thing which is perhaps auguring well for the bulls is that volatility has slipped. India VIX, as you can see on your screen, was down by about 2%, more than 2% in fact, and it's currently hovering at around 11 kind of levels. But with that, let's also welcome our guest, Dr. Ravi Singh, founder of DRS Finvest. Sir, a very good morning to you. And I want to begin by asking about the the price action that we have seen in the last few trading sessions, we have been stuck in this 200 point range on Nifty, and on the downside, while we have not lost much of the recouped gains, on the upside we are still struggling around that 19,840 to 19,875, which by the way is the October and the November high. What's your overall take on Nifty, the headliners in general? Do we or can we expect some sort of consolidation going ahead?
Yeah, you rightly said that earlier, historically, we have seen this type of movement in December, 15 December to 15 January. Now is happened early. So quite possible that there is a very sideways range in Nifty, and maybe if you compare with the major future data, or you can say that Y data is also suggesting the same platform exactly is 19,700 side is put side is major accumulation, and call side is 19,800, 850 and 900. So that's why we have seen a very narrow range in Nifty. So most probably Nifty has a strong support at 19,700 and very strong resistance at 19,800, but definitely we will see major accumulation in between these prices.
Now, sir, moving on to the banking pack, we have seen wild movements in the last 2-3 trading sessions where we, bank Nifty, which was pretty much holding above the 20-day moving average and the 200-day moving average in the recent correction also. But on the expiry day, we slipped below that on an intraday basis, recouped those losses, and ended above those levels. Yesterday, we also saw about 1/3% gain in the banking pack. Was this the pivot we were looking for? And perhaps what will we see first actually? The 43,000 levels, a break below that, or 44,000 perhaps?
Is the same kind of moment whatever we have seen in Nifty. Basically, we are waiting for the next move, some pull up or some announcement, because recent days RBI and our FM minister is also saying that there is some risk on inflation. That's why we have seen some profit booking and sideways trend going on. So majorly, if you compare with the chart, then you find very strong support at 43,300 and 43,000 level, and major resistance at 43,850 to 43,950. Basically, there is a very strong resistance at higher levels, and news are negative. So market will, I don't think so, market will sustain above 4,400. So basically, we have to wait some announcement, and then after that, we may see some positive rally in Bank Nifty also.
Now, sir, shifting focus to individual stocks. Now, one of the stocks that was on my radar this morning and has been actually, in fact, on my radar since the last couple of days is UltraTech Cement. Now, there is a news trigger, of course. It's looking to acquire Kesoram's cement assets now, and I mean, if you look at the whole the cement pack in general, good set of returns we have given, and UltraTech has been a leader in that pack, outperforming all other cement stocks. What's your view on UltraTech, sir?
Yeah, its performance is good. Last 3-month return have given 5%. 1 year return is 26%, and enough return because overall cement sector are looking strong. And if you compare with the PE, then UltraTech Cement PE is in a comfortable zone. And with the chart comparison, definitely the breakouts is going on. Daily higher and high is making, and now we may see some profit booking till 8,600 or 8,550, but that level is also appealing for the buyers, and we may see the target near-term target to 9,000 levels. So overall chart structure is strong, and long-term chart is also strong. So long-term buyer has opportunity to buy at current level.
Good morning, Dr. Singh. Amit Ranjan here. I'll drive your attention towards Pharma, and the stock in question, of course, is Cipla, which witnessed its biggest fall in a day in 9 months yesterday. It closed at 1,174.4. Right now, it is at 1,000, a little bit up at 1,189. Now, this came after the reports of a warning letter that was issued by the United States Food and Drug Administration, which came to light against their Pithampur unit. And the warning letter included data integrity issues, product complaints, and microbial issues. There was another unit which is also mentioned in the warning letter, which is their Goa unit, which is also under the radar of scrutiny. Now, Cipla has drawn its highest ever revenue last September from the US markets at $229 million. They reported 43.3% rise in their consolidated net profits last quarter. HSBC has also cut their target price, although they have maintained a buy rating for the stock. My question to you is it a good time to put money into Cipla, or is it time to just wait and watch a little bit more?
And also
because it's down.
Looks like its US operations will be significantly impacted by this warning letter.
Yes, and revenues are, as we see, maximum from the US.
Right.
So how do you see the whole scenario and the stock?
Yeah, exactly. The news is negative, and we have seen the reaction on chart and stocks also. But overall, if you compare the pharma industry, then I think compared to the Nifty is in an uptrend, and pharma sector is also in an uptrend. But yeah, definitely it will impact, and stock may come to 1000, 1050 levels. But long-term chart is very good, because if you see that rally have started around 800 levels and now touches the 1280 levels, and the overall returns are in 5% in 3 months, and if you compare 1 year return is around to 10%. So I think that news is negative, and that impact is also negative, but overall trend is up, and we may see 1000 and 1050 levels. But long-term investor, they continue their position. I don't think so there is a huge impact on the charts or huge impact on the prices. So a strong uptrend it will continue.
Yeah, even today the stock is up 1.5% already. So for new investors, do you advise them to get into the stock right now? Good time to get into the stock, as you're saying long term it is going to increase?
Yeah, Amitji, there is a good opportunity, because stock has made a high of 1277, and now it corrected to 4 to 5%. And for the new investor, definitely there is an opportunity, but they can take a cautious of spread their buying into two levels. One is current level is 50% and 50% around 1050 levels. So they can run with the target of 1300 to 1350 levels in the next 1 year. So long-term chart is good.
Okay, target levels of over 1300. So before we let you go, could you give us your top 5 picks for the markets?
Yeah, market is sideways, but some of stocks are in a very strong positive hand. Number one is BHEL. BHEL is looking strong on charts, and day by day making higher and high. So we can take a fresh buy position from the current level is around 140 to 42 levels for the target of 155, and with a stop loss of 138. Second stocks is NTPC. NTPC on chart is showing very good strength. Now it's trading around 13p, EPS is 19.72, and 1 year return is 50%, but stock has gaining attraction again, and in charts is also looking for the good target. So we can take a buy position at current level around 250 and 252 for the target of 265, with the stop loss of 245. And third stocks is BPCL. Now it's trading around 410 to 415 levels. Overall chart structure is very strong. It will continue made a higher high and higher lows. So long-term moving averages are also supporting, and crude oil prices is also now supporting. So we can take a buy position at current level for the target of intraday trader for the target of 420, and the long-term trader, they can hold their position for the 450 levels with a stop loss of 390, 395, 405 or 390 for the longer term. And fourth stock is GNFC. Now is structurally is in an uptrend and making low of around 680 or 685. So overall historical chart pattern is also in a secular uptrend. So we can take a buy position at current level at around 700 for the target of 735 with the stop loss of 685. There is one stock is in profit booking. So today we can take a sell position on future. There is a Asian Paint is hitting actually a lower band on Bollinger Band, and daily chart is also suggesting some profit booking more. So the selling pressure is in this counter is going on significantly, and this counter towards target of 3,000. So we can take a fresh sell position around 3150 for the target of 3080 and 3000 with the stop loss of 3175. These are the calls we can take for shorter period also, and we can take from longer period also.
All right, those are the calls from Mr. Ravi Singh. Asian Paints on the sell side, NTPC, JNFC and Bharat Petroleum are looking at as good buying opportunities. Sir, appreciate your thoughts. Thank you for joining us here on First Take.
Thank you.
But moving on, Amit, let's also look at how the markets are doing, because, you know, as I'm seeing on the stock charts, Nifty has in fact, you know, fallen below the 19,800 mark. Now we are in the red, and as of 10 a.m. Nifty was sitting at, you know, 19,794 levels, just about 6 points shy of the 19,800 mark, which, by the way, we have closed above in the last couple of sessions. Sensex is, you know, also, I think it's down by about 14 points from 66,000 levels. It's actually 65,986, not 66,986. Mid cap 100 is holding on to the gains. It's still holding above the 42,000 mark, but we have seen about a 100-point cut in the index. The small cap index, on the other hand, is actually building onto the morning gains, and it has gained. It's the only index that has actually gained by about 10 to 20 points since the last half an hour or so, and as of 10 a.m. it was up 0.32% at 13,829 mark. India VIX, the volatility index, is also trading lower. At 10 a.m. it was down about 2.18% at around 11 sort of levels. But, you know, Amit, there's also a big discussion, and Mr. Singh also pointed out that, you know, OMC stocks are doing fairly well, and that's on the back of, you know, correction in oil prices, which have, by the way, corrected by about $15-16 or 15% from their recent high of about $95 or so. What's the overall story playing out? Could you explain to us?
Okay, this is quite a curious case with two kinds of industries going the opposite directions. I'll give a little background. The oil prices, they rose slightly in the Asian trade on Friday as traders remained on the edge over the OPEC plus meeting that, as you mentioned earlier, that was delayed from, that has been delayed from November 26th to November 30th. And there was expectation of price cuts, production cuts, but additional production cuts by the cartel. These production cuts primarily have been led by two countries, Saudi Arabia and Russia.
So currently they are at 1.3 million barrels cut, and they were going to perhaps go for
Those
another
expectations, but the reports are that African countries, specifically Angola and Nigeria, wanted an increase in production. So that is the disagreement.
So
that is why there is a delay in this meeting. But even the production cuts that Russia and Saudi Arabia have effected over the last 1 year, they have given only a fleeting support to prices, because the markets are on jitters, on an edge, because of the worsening geopolitical situations and the demand situations. Brent futures yesterday, as of yesterday, rose 0.3%, very marginally, to $81.6 per barrel. Western Texas Intermediate also rose 0.4%, little bit more, to 79.69% a barrel.
Right.
Now I'll come to the oil impact to Indian companies. We'll look at the downstream companies, upstream companies first. Bar Reliance Industries, which has only one part of their operations is into exploration. There is one odd one out, the terzo in Commodore, if I may call it, that is ONGC, which is up 3.5%.
Right.
Oil India, British Petroleum are both down. So upstream companies, all in all, they are basically down.
So upstream companies are the companies which are in the exploration of
That's
business.
why I put Reliance out, because they're just one part of it is, and they're very small portion of it.
So correction in crude prices will perhaps, impact their profit margins, since their byproduct or their produce is, oil essentially.
It's linked to production, and if there is a production cut, then it'll affect them on the down. So, but for ONGC, which I said is a sort of a terzo in Commodore, other stocks are down. Now we come to downstream companies. These are 1 month returns. So, like our earlier guest mentioned, that Bharat Petroleum is a little down, but on 1 month, all the three companies have given quite a bit of returns. 21% for Bharat Petroleum, 32.6% for Hindustan Petroleum, and Indian Oil Corporation 18.5%. So downstream companies are giving good returns. Upstream companies are a little bit on an edge, in jitters, not expecting not knowing what to expect from the OPEC Plus meeting, which is going to happen. Maybe there is no production cut.
Right.
Maybe.
But I mean, the kind of returns we are seeing, Amit, clearly, they have benefited from a decline in oil prices, especially the downstream companies. The movement has been pretty similar. Like the Brent crude prices have corrected by about 15 to 20% in the past month. And these companies are, have risen by about 15 to, the stocks have risen by about 20 to 30% or so.
So there is optimism.
And also, I think they are turning profitable on a year-on-year basis because of the reduction in windfall taxes. That's also perhaps boding well for them.
That's also, and overall the demand has gone up.
Right,
so
right,
there is no question, and especially in India, the demand has gone up, shot up quite a bit, and we know from the results of all the automobile and industrial companies that we keep talking about. I have a question for our next guest. If we can, Dr. Bathini. Good morning, sir.
Good morning, Amit. Good morning, Suyash.
We were talking about oil now. My question to you is it a good time for investors to look towards upstream companies which are down right now, but should we expect them to go up so they can book profits on those companies? And is it a good time still to look at downstream companies which are already on a high over the last month?
Yeah, it's a very interesting question, Amit. Okay, India, all the upstream companies are public sector undertakings by and large. Oil India and ONGC, these are the names. By and large, they are the public sector undertakings. And country like India at this point of time, okay, my favorites will be the downstream companies, the oil marketing companies, than the companies which are in the oil exploration activities concerned in India. So on a medium to short-term basis, probably one can look at downstream, but upstream companies, the exploration companies. Whereas on a longer-term basis, I would be more keen and interested because of their dividend yields, and also the oil marketing companies, as given the kind of the bearishness what we can expect in the global crude oil prices. We can be with the downstream oil marketing companies because of the relative valuations are concerned. So actually, many times we discussed on your show, when the oil was trending at $100 per barrel, we kept on discussing the oil, even though there are worries, there are concerns rising in the Middle East. Despite of all these negative news, we acknowledge that oil prices are peaked out, and we can expect in further coming months, oil prices are expected to come down. That's what we are witnessing right now. As a point of matter, even though OPEC countries are planning to cut their output, oil production, whereas right now US has emerged as one of the highest quantum of oil producer. So US production has been going up. this is the reason we could able to see the downtrend in oil prices at this point of time. Despite of the Saudi, the other countries are cutting their oil production, but US oil production has been coming into the streamline.
Okay.
And India also one of the key importer of US oil right now. Of course, the Russian oil also coming, that's the key portion, but US oil also coming into the markets.
All right, shifting focus from crude to Indian markets. Now, sir, we have, pretty much broadly speaking, Nifty has been in a range of about 1,000 points. We saw a big 1,000 point decline from 19,870 sort of levels to 19,837, which, by the way, took only 6 sessions. We have clawed back and we have rescaled those levels, but on the upside we are struggling at around 19,875, which is the swing high, and have not reclaimed that. And the clawback also has been relatively slow. It took us about 20 sessions or so. Are you making something of this observation, where on the downside we declined sharply in a matter of 6 sessions? On the upside it's taking a lot of time, and on the upside also we are facing resistance now. What's your view there, sir?
Yeah, so actually there is a great saying on Wall Street. Whenever market try to go up, it takes the stairs, and when it's coming down, it takes the elevator. So that's what we are seeing. When it's going down, it goes very fast, but when we have to reclaim the claim to the mountain, okay, it takes time. Okay, the same law is applicable, but markets are right now at a consolidation phase. It needs to gather some more momentum and courage to climb this range. And so as you can see the past couple of quarters also, this is the range market was struggling. In fact, 19,800, even the market goes to the level of very near kissing distance to 20,000 level, and some kind of negative news in the geopolitical environment comes from the global news, which acts as the negative for the market at this point, at this level, and market is going back. So right now market has to gather some kind of momentum at this point of time. We don't see any kind of significant buying from the foreign portfolio investors to give some more, add some fuel from this level. And also, Suyash, the point to mention right now, despite of the foreign portfolio investors, very less participation and selling, markets are quite resilient. But at this point of time, a lot of money has been going into the primary market. We have lined up more than 5 IPOs are there. So a lot of money has been getting channelized. And if you see the subscription of those IPOs, it is multifold. Money has been getting into the primary market right now. So this is the reason some kind of consolidation is there in the secondary market at this point of time. Once these IPOs opens, we can see the momentum that money get channelized into the secondary market again. So right now, investors also a little bit selective at this point of time while choosing the stocks.
Now, so as you rightly mentioned, primary market is also seeing a lot of activity, and today is the closing day for 4 IPOs, including Tata Tech, Gandhar Oil, Flair Writing and Fed Bank. Between the 4, if one is to, perhaps subscribe to a primary issue, what would that be?
Yeah, Tata Technologies always looks very attractive at this point of time because of the deep expertise they have in the automobile industry, and also they are venturing into segments like defense and aviation. These are crucial things. And at a 500 rupees upper cap of the issue, at 20,000 valuation, 20,000 crores market cap, the stock looks very attractive, Suyash. But on a lighter note, Suyash, whenever there is an IPO comes, it's love before marriage. Okay, there is a lot of exuberance, a lot of euphoria will be there. But post the marriage, the earnings comes into the matter. Okay, what is the EPS, valuations, and the theme of the company. So always, whenever any IPO comes, in the case of LIC or in the case of any IPO, there is a kind of exuberance will be there before the IPO.
Mr. Bathini, next week is quite an eventful week for 2 reasons. One, it is a shortened week because of Guru Nanak Jayanti. On Monday, markets are closed. And then it's an election week. So focus of everybody will be on election. My question to you is, will the focus of traders also be only towards the state elections that are happening, or there will be cues? They will be looking at cues from other markets, global cues also.
Amit, all the factors will play a role, okay, at this point of time. But seems to be the state elections are by and large, it determines by and large the local matters and the local politics are restricted to the states. So it's going to have some kind of impact in the short term, but I don't think so. It's going to have a greater impact on the markets on a longer term basis. Market is looking forward for the general election, which is scheduled in 24. But state election, it do have some kind of rubbing impact in a shorter term. But by and large, macro data is essential for the markets at this point of time.
Now, sir, follow up on this. I mean, if there is a big surprise, if the ruling party, if there is lack of continuity, what sort of, if you can give us a in percentage terms, what sort of a percentage impact can we see on the markets?
So, yes, if at all in the state elections, the impact will be very, very negligible in terms of the markets are concerned at this point of time. That is the reason we can see markets are consolidating at this point of time, just to make a wait and watch approach. Otherwise, the market would have crossed 20,000 levels by this time. So markets are in a wait and approach before these kind of events that are going to take place. But I don't think so. It's going to have a major knee-jerk reaction, on the market on a longer term basis. Might be a couple of days. Market can take give a pause, but I don't think so. It's going to impact on the current rally at this point of time, because it's not have any impact on the policy continuity at this point of time on the market. It's by and large the local politics that plays the role in terms of the state elections are concerned.
Now, sir, I mean, given the kind of volatility that we have seen, and a lot of people ask me, since I cover markets, people my age, around 25 to 30 years of age, ask me how, if they are to, start their investing journey, how do they even approach the markets? Now, I told them we'll have Mr. Kranti Bhatini here today, joining us. So, over to you. What does a person in their mid to late 20s or even early 30s, how do they approach market? How do they build a fresh portfolio?
So, that's a very interesting question, because a couple of days back, the number of demat accounts touched more than 10 crores with CDSL. Okay, right. It's an eventful day. And when we started our careers way back, as you mentioned, your age, when we started our careers, okay, we never thought getting above 1 crore mark about demat accounts is a 1%. That 100 crores population is a very eventful thing. But right now we are at 10%, but it's a long way because of the digitalization. And coming to your point, the new investor who is coming to the market, look at the greater picture of India. Don't worry about what the things happens tomorrow or next 6 months or next 1 year. India is bound to have progressing very well. And for the matter of fact, okay, we are transforming from a unorganized economy to a very organized economy, and digitalization is taking place. So the fruits are going to reflect all these developments are reflect on the company earnings. So as an initial beginner, try to see the greater picture and and stick to the large cap till the time you get understanding about the market and company earnings and how the forecasting the company earnings. Stick to the large cap and invest in the themes. It is quite common sense where the development is taking place and what are the leaders in this place, and one can stick to the leaders. Probably leaders might be in a consolidation phase. It will not entice the investor buying a Reliance Industries at this point of time. But try to understand how the market is valuing these companies and try to be with these leaders on a longer term basis. See the greater picture. Okay, and if the investor get understanding of the market, okay, right, understanding about the market cycles, he can get into mid and small caps.
All right, those are the words of wisdom from Mr. Kranti Bhatini. Sir, Always a pleasure talking to you. Appreciate your thoughts. Thank you for joining us here on First Take.
Thanks, Yash and Amit. Always my pleasure to speak to you and share my views with all your viewers.
But with that, let's also just quickly run our viewers through the numbers. Amit, the markets are pretty much holding on to around that 19,800 mark. On the Nifty, we are pretty much hovering in the range of about 5-10 points on the downside or the upside. Since in this earlier morning at around 10:15, Nifty was down 0.01% below the 19,800 mark. Sensex has also, given up some of its gains, and it's down by about 5 points from 66,000. Mid cap and the small cap indices are doing fairly well and are holding on to the morning gains. But with that, we have completely run out of time of this edition of First Take. Keep watching News 9.